AlgoBox clips.
Now let's talk about the distribution. Let's just draw the lines of our accumulation. So accumulating in this area, price has been maybe meandering back and forth between these two, maybe breaking out a little bit on occasion, some of them coming in. Now, what I like to see, one of my favorites, is when they and start to move down, show that four-legged dog trap, one of my favorites. Okay, four-legged dog trap or some other kind of trap, but you just see it. Maybe a cross, big alpha omega cross shows up down here, but the big picture is trap. So let's draw in, let's do blue here. Trap right outside on one side. This is what some people will call the manipulation move in Wyckoff or, ICT's like, all right, it's always got to be manipulation. But how many times is it not, right? It doesn't show up. He acts like things are rules because I coded the market. I'm the man. Bro, the guy can't even code. What are you talking about coding market? Cracks me up. All right, sorry. So trap outside, and now price starts to go back inside the zone and doesn't come back out. Oftentimes the big play comes from the other side. Once we're out and starting to move up here, like I told you guys earlier, one of my favorite plays is what? DCDM coming in outside of the other side of that zone, because all of this was accumulated. We've got all of the orders necessary to make a big move. We accumulate all those. I talk about this more in other videos where you've got to have things in your hand in order to use them. And this is what I kind of picture the algorithms that are moving the markets. They've got to collect all of these. This is the collection phase. Okay, we're collecting inside of the accumulation zone. We also call this the collection phase. Okay, it collected enough contracts. Thousands of contracts were collected in here. Now we run them off sides, and then boom, we hopefully, what they want to do is help have a bunch of buyers step in over here on the other side of all the sellers who got wrecked over here, and then have their stops that are also now buy orders because they're buy stops, plus people buying in that are breaking out on the other side, plus people, so just heavy buying on the other side to push this to the next zone. Now, you accumulate in one, you distribute, and then you now accumulate again. And while they're accumulating, the next set of algorithms are accumulating. These guys are dumping their contracts. So phase one, accumulate in this zone. We run it up, we distribute, and then what's up here? Another accumulation zone. New price, right? So they're buying all this down here, cha-ching. They're like, all right, we bought all this. It cost us money. Now we want to sell it. This is how they make money, right? Up here, they need to sell it. Well, who are they going to sell to? They need to sell it to the suckers up here because they need some people to buy up here. Otherwise, who are they going to sell it to? All right, so they need to push it up enough to make it look like we're going up longer. And then they start selling off their orders of all the ones. They picked up 1,000 contracts down here. Okay, now they need to sell 1,000 contracts up here. But is it really 1,000? Well, it costs them money to move this up. So people think, oh, it's 1,000 down here, it's 1,000 up here. No, it's not. It's more like pick up 1,000 down here, takes about 400 or 500 to make the move up, and now you're selling 500 of those up top, up here. This is kind of a weird concept for you to understand, but this is how things actually move in accumulation distribution markets. The distribution costs them money as well, which is why they don't want you in the way, which is why people who are telling you that, oh, you got to wait till a high volume move that is the biggest BS ever. How many people are telling you, oh, no, you want a lot of high volume right here? No, you don't. That costs them money. If there are people getting in the way, it's like trying to move through. If you want to swim fast, do you want to swim through mud or do you want to swim through water? And can you run faster than you can swim? Most people can because you're going through air. Which one is thinner? The density. Do you want density here? Do you want stuff getting in the way? No, you actually want to distribute through low volume. People are stupid. You want to move through low volume. You don't want to go through high volume. Oh, it's not a confirmed move because it's not. That's why they wonder why they're broke. All right, so you move through low volume distribution and then accumulation again up top. So these are the moves. And generally, we want to try to catch this because this typically is, the biggest moves. These are the ones where we catch runners. But just in case we don't, what do we have? Right, for our system, the reason that, we can kind of win in both is fine. We're T1, T2. This is where we live. And T1, T2 can be from here to here, right? But we could also have a runner that continues on and we wait until the opposing signal that might show up at the next accumulation zone where they're going to start, expelling their orders, right? But this is what I focus on if you're a business owner, taking chunks, right? T1, T2, chunk. T1, T2, chunk. T1, T2, chunk, runner, cool, bonus.
Press the like button, share, subscribe, and comment below with your thoughts and what you've learned.
Watch this next video.